Topic 1. Headlines show a market and tech landscape dominated by AI, chip volatility, and macro uncertainty. Markets in the tech sector moved from AI driven rallies into a correction phase, amplifying volatility in semiconductors and AI related stocks as investors rotated to defensive sectors after Broadcom's weak results. Asian chip leaders Samsung, SK Hynix, TSMC, Advantest, and global chip names fell or wobbled, while China aggressively courts Silicon Valley AI talent. Jensen Huang's visit, SoftBank's son, and other bullish signs coexist with warnings from Anthropic about possible recursive self-improvement. The scene is crowded with blockbuster IPO plans, AI layoffs, robotic setbacks, and debate over index inclusion risks. Overall, AI is reshaping markets but overheating. Self-improvement risks and macro uncertainty raise both short-term volatility and structural risk. Topic 2. U.S. employers added 172,000 jobs in May, signaling continued labor market resilience. Non-farm payrolls rose by 172,000, with the unemployment rate steady at 4.3%. Average hourly earnings grew about 3.4% year over year, leaving real wages pressured versus April's CPI pace. The report lifted Treasury yields sharply, 10-year near 4.53%, 2-year also up, weighed on equity futures, and reflected broad gains in health, social care, leisure, and local government, plus upward revisions for March-April, totaling roughly 93,000 jobs. Policymakers face higher odds of a tighter stance as strong jobs and energy-related price moves erode household savings, supporting consumption now but risking future slowdowns and upward inflationary pressure. Topic 3. Energy and geopolitics are tense around the Strait of Hormuz, reshaping energy security debates and 2026 oil winners. Iran-related tensions have sharply disrupted Hormuz transit, affecting about one-fifth of seaborne oil LNG flows, spurring supply fears and forcing ships to coordinate exits and U.S. Navy contact. Total through traffic remains far below pre-war levels. The shock sent oil, gold, and commodity-sensitive currencies higher and rewarded CTA trend-following funds and commodity strategies, though some funds trimmed crude exposure as momentum softened. Military skirmishes, risks to commercial shipping, and sanction complications have accelerated discussion of energy security, boosting interest in renewables, plus storage for strategic resilience, while gas LNG remains a short-term bridge. Topic 4. Policy and regulatory shifts tied to the Trump administration and federal agencies. The administration plans to use measures, including the Defense Production Act, and roughly $800 million to support coal plants, new projects, and export terminals, a move framed as grid reliability and jobs creation, but criticized as costly, polluting, and anti-renewable. Plans to privatize Fannie Mae and Freddie Mac face delay as FHFA leadership takes on extra roles. A tougher green card stance appears somewhat softened after corporate pushback. CFPB guidance would urge lenders to factor immigration-related risks into repayment ability assessments, non-binding but influential, while FinCEN warned banks to watch for fraud linked to undocumented customers. Together, these actions increase compliance burdens and could reshape housing and banking practices. Topic 5. Finance and crypto developments. Bitcoin back towards $60,000 amid shifting flows and IPO activity. Bitcoin slid near 60K, around 59 or 60.5, as sales from Michael Saylor-linked funds, strong jobs data, and rising yields triggered liquidations. Bitcoin ETF FF assets fell in May before small inflows resumed. Banks and regulators are cautious amid Clarity Act uncertainty and warnings that crypto bank linkages could create systemic risks. Capital has been rotating into AI names, memory chips, and anticipated large IPOs. Quantinuum's IPO activity, strong CTA returns from energy trends, and family offices pouring capital into sports and alternative assets signal broader reallocation. Crypto faces short-term pressure and regulatory questions,